Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. The market downturn in the last week or so has provided us a few more options than we've had prior to that for possible swing trades. So today we're taking a look at the Hershey Company, ticker symbol HSY. This is a well-known confectionery and snack candy maker stationed here in Pennsylvania in North America. Company has a huge array of candies and snacks and things that most people are well aware of all around the world. Here we, of course, have the Hershey bar and the Hershey Kisses, but also Reese's peanut butter cups, Jolly Ranchers. Just reading off the list here, Almond Joy, Cadbury's, one of my favorites when I was a kid. Good and Plenty, Heath Bars, Kit Kats, Payday, Rolos, Twizzlers, Whoppers, York Peppermint Patties, Icebreakers, and the list goes on. And they have multiple brands sold in Europe, Japan, Australia, and all around the world. And here we have Hershey's annual chart. You see it closed Friday at $218.78 a share. It is well below all the moving averages. They had earnings back on the 27th, and it was actually an earnings beat, but the guidance offered was not what was hoped for. And I counted through the share price revisions by multiple companies. I counted 14 or 15 of them. 2 or 3 of them were revised up, but the rest, the vast majority, revised the target share price down. And that's what caused this consistent downtrend over the last 2 or 3 weeks since then. And we look here in the RSI, you'll see the RSI is oversold, but appears to have turned up. The stochastics are both oversold, and they do also appear to have flared up finally. The volume has been slightly higher than average lately, but you'll notice that there are, of course, many more red days than green days over the last few weeks. In the MACD, though it is below zero, and it does look like it is sort of sidling its way slowly back to zero, it is concerningly going sideways for an extended period here, although it does look like the lines are narrowing and perhaps are ready to cross, or at least heading in that direction. One thing I'll point out here is this is the furthest below the 200 moving average that we've had in a long time. You see the blue line in your screen here is on this chart. It's 200-day moving average. It doesn't even come close any of the other times to being this far below that line. If we even zoom out to the 5-year chart, you'll see a couple of things. First, you'll see Hershey has a very steady, consistent upward trend. Certainly there's a period here, if you bought it September 2019 all the way over here to March 2021, you'd have a couple of years where there was essentially flat, no growth, or even slightly down. Now this includes the crash of COVID, of course, so most of this time can be safely ignored as far as the share price action goes. But you'll see this is a very steady upward climb otherwise. And if you look here, you see how far below the 200 moving average we are right now. And the only time we've been this far below the 200 moving average is during the flash crash for COVID. So no other time in the last 5 years has this been screaming as loud by me as it is right now. So just keep that in mind when you're considering Hershey. And I will switch back to the annual chart, and we will take a look at the financials fundamentals briefly here. You see there's low short interest at just over 2%. And Hershey does have more debt than 76% of companies. Now this compares it to the food processing industry. Now if we move on to the valuation, the PE is greater than 77% of other companies in the food processing industry. Current PE listed here is 26.46, which is certainly above average. Now, I will point out that I've been watching Hershey for quite a while, and the PE is always high. This company simply commands a premium valuation by the market. So keep that in mind. This is lower than it has been in quite some time, even though it's still above average. And the gross margin, 43.92%, which is impressively above average. In fact, it beats out 88% of other companies in the food processing industry. And the operating margin at 20.31%, it beats out 98% of its peers. That does not surprise me at all. In fact, Milton Hershey is an interesting historical figure who is known to have done for the candy and snack industry pretty much exactly what Henry Ford did for the automobile industry. And before Milton Hershey came along, chocolate was reserved as a dessert only for the uber wealthy. And it was his goal to bring chocolate to the masses, and he wanted to sell bars for 5 cents, which he did by automating the manufacturing process, much the way Henry Ford did for automobiles. So it does not surprise me that a company with a history of innovation has an operating margin far above its peers. And the return on equity here, again, 54.35% is outstanding. It beats out 96% of other companies in the industry. The growth rate is on par with others, so average there. The dividend yield is 2.19%, which is above the market average, but below the industry average. However, the payout ratio is 46%, which provides a very safe, secure dividend for those who are looking for that sort of thing. Overall, I think this could be a good time to start a position in Hershey if you were interested. Could certainly be better, but there aren't many times when buying Hershey was better than it is right now. So please let me know what you think in the comments below. And remember that none of this is financial advice. I'm not a financial advisor. But if you got something out of the video, I'd really appreciate it if you'd hit the like button and subscribe to help out the channel. If you enjoy this kind of content, please hit the bell notification to be alerted when new videos post. Also, if you'd like me to take a look at a particular company using the indicators I present here, just mention that in the comments and I'll try to get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.